Coming up, the NPP government is trailing the NDC in the upcoming polls and would overspend to win voters' sympathy. That's warning from Fitch Solutions. But what checks can be put in place, we will explore. Also coming up, Ghana cedi ends 2023 with a year-to-date depreciation of 15.57% against the US dollar in the retail market, far lower than the about 50% recorded in 2022. My name is Daryl. Kwawu. We've got details of these and other stories coming up. Do stay with us. And thanks for staying with us, everyone. The Ghana cedi ended 2023 with a year-to-date depreciation of 15.57% against the US dollar in the retail market. However, it was neither in the best spot returns or worst spot returns bracket, according to Bloomberg. Here's a business desk report.
The 3-year International Monetary Fund program has significantly helped to reduce the sharp depreciation of the local currency experienced in 2022. To this end, the country's capital and financial accounts benefited from reduced portfolio outflows and lower amortization payments. Again, the current account recorded a surplus of $1 billion in contrast to a deficit of $1.8 billion recorded for the same period of 2022. These favorable developments in the current and the capital and financial accounts, according to the Bank of Ghana, impacted positively on the balance of payments. Before 2023 ended, demand for the US dollar eased following the arrival of the first tranche of the cocoa syndicated loan. As such, market dealers expected the foreign exchange inflows to increase the supply side intervention and bolster the cedi in the near term. Meanwhile, the cedi lost about 27.81% in value to the dollar on the interbank market.
Well, on Zoom with us is Senior Finance Lecturer at the University of Ghana Business School, Dr. Benjamin Amwal. Good afternoon to you and a Happy New Year. What's your assessment of the performance of the cedi last year? Year-to-date depreciation of 15.57% against the US dollar on the retail market. That's far lower than the about 50% recorded in 2022. That sounds like a major improvement.
Happy New Year to you and to your listeners. Indeed, the performance of the cedi last year compared to the previous year is very much of an improvement. Although the cedi depreciated, you can clearly see that the cedi was much stronger in 2023 than the year before. And so we have to give, in this case, credit to the central bank for doing all it has done in the year under review and for giving us a cedi that has been relatively stable compared to the previous year that we all saw. But this is not too strange about the cedi. If you have watched and observed the historical trend, the Ghana cedi, realize that if you look at the political business cycle that we have in Ghana, the year preceding the election year, our cedi normally have challenges. Historically, the average has been about a 21% loss. Historically, I'm talking about the average. Each year before the election year, some years we have done poorly in terms of the strength of the cedi. And then in election year in particular, if you look at the historical trend, the depreciation election year in particular has averaged over the period about 25%. So when you look at last year, and on the back of the previous year, in addition to the fact that we have gone through a very difficult economic condition, the domestic debt exchange program, I would definitely say that, yes, it is good. But it's not so strange if you put the cedi's performance in its historical context.
And so what is your outlook for this year?
What we are seeing here is that in an election year, the cedi, in terms of campaign campaign message, the performance of the CD will come strong. And so we expect that the two big political parties will commitment going into the election year and into the election on how best the CD will perform. In this regard, we are expecting that the CD will end up at, let's say, 14 or lowest 13.95 cedis to dollar.
Wow. And you talk about the upcoming elections. How about a delay in the disbursement of the second tranche of the IMF funds? Would that have an impact on the city too?
Yeah, it will because it will. But the issue is that we have been going through IMF programs all these years, and we have seen the CD's performance all these years too. So then the question is, what is so special about this particular IMF intervention that may give us a different performance of the Ghana cedi? It is possible that it will help, but if we basically put the performance of the cedi into its historical performance, yes, the IMF support will come, but we still predict or we still foresee that the cedi will be trading around 13.95 thereabout to about 14 cedis come the year end, irrespective of the support that we'll get from the IMF.
Yeah, I mean, what else should the government be doing to keep the cedi in check? What else can it do?
We still have to work on our attempt to look inwards in terms of what we consume. And recently, the government came up with some commitments to help us to take that bold initiative of looking inwards in terms of many of the items that we consume. I think we've had a long time and enough discussion on that particular intervention, trade intervention. What we need to see now is to be seeing the rollout and government commitment into making sure that that policy intervention comes to work in our attempt to reduce our import. If we can see the commitment and we can see equal local surge to meet the demand that will be created through this policy intervention from the government, it will bring some confidence and it will also help traders to look inwards for some of the things that we have been
Okay, Doc, if you could stay with me, I want your thoughts on this story we are going to run, a warning from Fitch Solutions of significant public expenditure overruns by the government ahead of the December 24 general election. According to the UK-based firm, this is because the ruling government trails the largest opposition party and will therefore spend to win voter sympathy. Let's just take a listen to that report and I'll ask your thoughts.
The start of the century, public expenditure as a share of the size of the economy increased by an average of 3.0 percentage points during election years. This reflects the government's tendency to subsidize utilities and implement social welfare programs to garner public support. It therefore anticipates that such measures will be implemented again in 2024, improving disposable incomes and stimulating household spending. It projected private consumption growth to tick up to 3.8% in 2024 from the 3.2% recorded in 2023, contributing 2.9 percentage points to headline real growth. Added that a moderation in consumer price inflation due to more favorable exchange rate dynamics will strengthen household spending. Again, the likely implementation of social support programs ahead of the December election will support disposable incomes and stimulate domestic consumption.
Doc, how seriously should we take this warning from Fitch Solutions?
It is very normal in our case when it comes to our political business cycle, especially with the fourth Republican Constitution that we have been using for some years now. We see the surge in government attempt to spend and also to be seen to be working for the people to win votes. This is not the first time we're going to witness. And that is what normally erodes the gains that we are able to record before elections. this is not a Ghanaian thing. If you look around the world, many government or political parties in power tend to show that level of spending and that level of social support to win political favor. Then, after elections, we go back to normalize the situation. It will happen. Of course, we have heard statements that the government is committed to stay within its budget. But how many times haven't we heard such statements? And after the event, having seen something different. All we need to do is to watch and hope that this time around, even if the spending will take place, the spending should be domesticated to the extent that we will not demand forex to do that spending. Rather spend on indigenous companies or indigenous products so that we will find a way of keeping the spending within the economy than to spend on items that may be imported that in the end will not benefit us directly. You shouldn't forget that many of the items we use to support our elections are even imported. So that is a huge chunk of our budget that is moving out. If we are going to do additional spending around these activities, why don't we try to domesticate the items in that spending bucket so that we can at least help cut down on our need for the US dollars in the year 2024?
Yeah, it's just a quick question as we wrap up. Wouldn't an IMF program be enough to put the government under check when it comes to spending?
We were on an IMF program in the year 2020, 2015 and 2016. So this was the first time we're going through an IMF program. What did we see before and what did we see after? And so, yes, we are on an IMF program. And then sometimes when it comes to the quest to win political power, the temptation is so strong that, yes, you know you are on an IMF program, but you still have to do what you can do to get the power. After getting power, we can talk about IMF. So, yes, we know, and we have seen the history. We'll go through the election, yes, IMF is around. But if the temptation is so strong to win the power, we'll win it, and then later we'll talk to IMF.
All right. Thank you so much, Dr. Benjamin Amoah, Senior Finance Lecturer at the University of Ghana Business School. I appreciate your time. While financial economist Professor Govt Bokwe is advising the government and the public to be moderate in celebrations of a turnaround in the economy. According to him, though the economy has witnessed some improvement, there's still a long way to go as the country is yet to start its external debt restructuring. Speaking on the Super Morning Show on Joy FM, Professor Bokwe, who is with the University of Ghana Business School, said the recovery by the country is coming at a great cost.
And we are not out of it. I mean, and let me put that so that every Ghanaian, we have to be moderate with our expectations in terms of how growth is going to turn out and how it's going to benefit Ghanaian. I mean, you can have growth at different level. The economy can recover at different level, right? But before it will benefit the ordinary Ghanaian, we are looking at maintaining macroeconomic stability for not less than 15 years. We say in economics, low inflation is desirable in itself, but you need to maintain low for long, right? We need to have low inflation of, let's say, about 6%, between 6% and 8% for not less than 15 years. Okay, then you begin to see how the macro level development begin to trickle down, begin to manifest at the micro level, at the household level. What we have seen over the years is some level of progress. Inflation comes down, then within the shortest possible time, it jumps up. That wide swings is not good for planning, it's not good for wealth preservation and the rest of them. So yes, we are seeing some recovery, but it's not the kind of recovery that we will say we have arrived. So if you see the macro numbers, all of them are not telling the same story. Yeah. They are all not pointing in the same direction. So if you see it that way, you will be unique to conclude that you have turned the corner.
Well, next we turn to the financial markets, and the market indices of the Ghana Stock Exchange are expected to remain stable this week. Joining us with a look ahead is Patrick Edem Agama, Head of Trading at Republic Securities. Good afternoon to you. Welcome back from the break and to a new year, Patrick. As we look ahead, what is your outlook for this year as far as the stock market is concerned?
Well, good afternoon and a happy new year to you. As far as the stock market is concerned, we expect the equities to gain this year as well. Contrary to the trend we've seen for election years, in the recent times, we've seen election years recorded losses on the exchange, but looking at the pressure we are seeing from the buy side and the sell side, we think this year is also going to close in the positives. We are tipping the banking stocks to recover. The top losers for last year were mainly banks. We've seen about top 6 of the losers being banks and financial institutions. So we expect them to actually recover. This market is mainly run by the financial institutions. So if they recover, we expect that to record positives for the year.
Yeah, well, based on the list that I have here, the worst performing stocks were Access Bank, Ecobank Ghana, SIC Enterprise Group, and Cowbank. And the best performing, Guinness Ghana Breweries, Bob, Total Energies, Unilever, MTN Ghana. What happened with them?
Well, we've seen that there were a couple of investors that actually shied away from the financial stocks. So a lot of sales happen in the financial stocks, dipping the prices of these financial stocks. And equity investors always look for alternatives. And we saw the rise in the oil marketing companies. So Total and Bob, being the crude palm oil, also saw some gains in that regard. Other alternatives like Unilever and GGBL were also sought for by investors. MTN was the largest trader for the year because of its liquidity, and we saw that also reflecting in the price. We are expecting to see how these companies will close their final year and see how that will affect their first quarter performance as well for this year.
Well, so we are told that the Ghana Stock Exchange placed 10th in dollar terms among 15 stock markets in Africa in 2023. What do we make of this performance?
Well, this is impressive. It's impressive because it's been a tough year. In fact, coming into 2023 was tough for the country, and having interest rates so high and investors demanding other alternatives like the bond market and also going to the bills other than stocks was also in a state where the market has not been before. But we saw also people moving to non-financial stocks in order to cater for their equity investment. So that also helped the market this year.
Well, turning to the money market, it was quite a year in 2023. We saw interest rates rise. How did the treasury market fare, do you think, and what was the impact of the interest rate hikes on government auctions?
Well, on the money markets last week, we saw government raising 4.2 billion against a target of 4.1 billion, getting about 3% oversubscription. But we saw interest rates each declining slightly. We saw the 91-day closing at 29.24, declining by 11.66 basis points. The 364-day cleared at 32.49, also decreasing slightly, and then the 182-day also decreased slightly to 31.88. We are expecting interest rates to actually trend downwards depending on how the exchange rate goes and all that. So when this happens, we expect the appetite from the government to also remain the same, like we've seen for last year, and investors will take advantage of that as well.
Yeah, I mean, we've seen inflation declining, and so we expect that to impact on interest rates. And so, going forward, I mean, from the investor perspective, people who have money to invest, you think T-bills are the way to go?
For now, yes, because it's clear now that is the only instrument on the market that doesn't have any issue around it, and we've seen government's appetite still high, relatively high. So we can say T-bills are the way to go, and inflation also now going below the interest rate makes these figures we get from the T-bills, I would say, sensible. So now you'll be able to maintain the value of your CD investing in T-bills.
Where else can investors put their monies?
The stock market is really a big place that investors can look to for this particular year. They should take advantage of the stocks that are down now, because you don't have to always be rushing for stocks that are already up. You look at the opportunities that are in the stocks that are trading low. Some are trading below their year highs and the year lows that we've seen. Even 5-year lows are being recorded in some of these financial stocks. So you should really look at those opportunities for this coming year.
Anything else we should have our eyes on this year as far as the markets are concerned?
Well, we should have an eyes on how the IMF discussion goes and how that's going to affect the appetite of government in terms of the treasury market. Investors are looking at that closely, because that's good, because we expect a lot of coupon payment on the new DDP bonds in the coming weeks to come. So we want to see how government is going to raise money to be able to pay this. We expect dollar payments, also dollar coupon payments in February. So we are looking at how government is going to fund these interest payments.
All right, Patrick Agama, Head of Trade and Republic Securities. Great to have you on the program. Have a nice rest of the day.
Thank you.
Now, the new World Bank Country Director, Dr. Robert O'Brien, is expected to assume office today. The economist is taking over from Pierre Laporte, who finally left town last week. So what might be the immediate priority of Dr. O'Brien? Here's George Jaffe with details.
Our engagement with officials in Washington, D.C., USA, one of his immediate priorities as the new World Bank Country Director is to see how the $300 million budget support can be advanced to Ghana on time. Now, that would be dependent on Ghana reaching a deal with its bilateral creditors this week on the proposed terms to restructure their debts. This will pave the way for the IMF board to meet on Ghana on January 11, 2024 and approve the $600 million to Ghana. Another issue that will be on Dr. O'Brien's table will be how some project funds that have been set aside for Ghana is indeed utilized on time. This is because the World Bank has indicated that it will assign these funds back to Washington, D.C., USA, if the necessary drawdowns are not done by June 2024. Dr. O'Brien is taking over at the time that Ghana is said to have received record $1.6 billion over the past 4 years, and he's going to work on advancing more support to the country. He's also expected to press ahead with programs aimed at reducing poverty in the country.
All right, let's head back to our top story for this afternoon, to do with Fitch Solutions warning about election year overspending as the NPP government is trailing the opposition. Essentially, Fitch Solutions saying that the NPP government would want to win voters' sympathy and so would spend more. Joining us for a reaction to this is Professor John Gachi, who is Dean of the University of Cape Coast School of Business. Your take on Fitch Solutions warning, Prof?
I think the warning is very clear. We have seen signs of that already. We saw that in 2020. Much of the talk about COVID-19 expenditure and the borrowing was actually directed to election expenditure in the country, and that has actually resulted into partly the problem that we encounter from 2021. Again, you have heard the president indicated that he will spend the 1 year left for him to make Ghanaians prosperous. What that means is that they are going to spend a lot of money in areas that they think that they are sensitive to Ghanaians, areas such as utilities, things like social intervention, that may not make so much meaning to the economy, but just to make people happy to vote. In election year, politicians always have the belief that they can destroy, and after election, they can reconstruct. Even though that will create a lot of problem for us, as we saw in 2021 from 2020 election. So we are going to see the same thing. And there are people who are of the view that because the IMF is too fast, the government cannot spend. That is not true. The government will do everything possible to overspend in the election year. So the IMF has been with us since 2015 up to 2019. That did not deter the government in engaging in all manner of borrowing and then the associated risk of borrowing that we have experienced. So I do not think that the IMF have that capacity to constrain the government from overspending.
So if the IMF can't even put the government in checks, what other checks can be put in place really to stop the government from overspending, or it's just much ado about nothing?
Appetite for power is more crucial to politicians than adhering to prudent financial management. And as I indicated, we have seen that already. And that is what will be happening. The election is crucial. Money will play a lot of role in the election. And I believe the IMF will have very little to do when the expenditure is being done.
All right, Prof. John Gachi, Dean, University of Cape Coast School of Business. Unfortunately, that's all time will allow us. Thanks for joining us, and a Happy New Year to you, sir. And that's the marketplace, everyone. Thanks for watching. There is more news on our website, myjoyonline.com/business. You can read more about the Fitch Solutions anticipation of significant expenditure overruns ahead of the December 2024 elections over there, myjoyonline.com/business. Tomorrow.